Welcome to the Investor Coaching Show, a podcast to help you get an insider's view of the financial world and escape common investment traps. We look at the financial news of the day and help you make sense of it so you can relax about money. And here's your host, Paul Winkler.
And welcome. This is the Investor Coaching Show. I'm Paul Winkler. He's Evan Barnard. And we are hanging out here talking, I thought we'd be going and talking about weather today. I wasn't sure. I mean, it was just before we got here. It was just like all, what broke loose, right? So it was a little touch and go around here, but I think we're all right.
It was like a dust storm, slight tornado kind of feel driving through downtown earlier.
A dust storm.
I mean, it was really interesting.
How Phoenix.
I know.
I mean, really.
Very.
Wow. So nothing to talk about this week either, right? Evan,
no news is good news.
No,
Wait a minute.
it's like news. Nothing going on overseas. We're not, not necessarily, dealing with anything over there, right? Why? Just so much going on. We talked a bit about that last week. We talked about war and how it affects stock markets, and we talked a little bit about what was just happening in general, and it just. I don't know about you, but I had gotten so many things from friends. Fake things.
Oh, yes.
This happened, and they sent me a picture of something.
Overseas, something happened.
Yeah, something, one was an aircraft carrier that got blown up. It was, his friend of mine. Oh, no, that didn't happen. And he would take it back a few minutes later. And there's so much misinformation. It just reminded me of, remember that documentary we did, Evan?
Yes.
The navigating
the fog of investing. Yeah.
And we talk about the navigating the fog of war in there.
Yeah.
It is so similar that, with war, you just don't really know what's going on half the time.
And that's even dealing with the truth.
Yeah.
I mean, dealing with the truth, you don't know what's going on a significant part of the time.
Yeah. If
you add the element of either AI or malicious fake news, you really muddy the waters.
Oh, yeah. And then you have so many different entities that have different interests involved. Like think about, receiving faxes and saying, hey, you need to buy this stock now. Or you need to be doing this, or shows that tell you need to be buying this or that or the other thing, or TV programs or CEOs being interviewed that would love for you to buy their stock, or somebody that runs a company that trades in a certain asset and they would love for you to buy that asset because if you drive it up, they make money.
Right.
Or if they create interest from you, they make money. It's kind of like that whole thing that I talk about that, my latest rampage has been, we make money when you make money, or we do well when you do well. And I'm like, the very first mutual fund ever was built on that premise.
Yes. 1923, right?
I want to say 14, but maybe I'm wrong.
Okay.
You could be right. It could be. It was
MFS, right?
Yes. Yeah.
MFS
we'll have to look that up. But that was the whole idea is that you have management fee, and if the portfolio gets larger, they're receiving more management fees. But you have a different way that you're making money is to attract money. Is the point that I've been making recently. Is if I run a mutual fund, let's say, and I pull in $1 billion. If I grow it to 1.3 billion by growing the assets, I make more money because the management fees are higher.
Right.
But if I attract 300 million more, I had the same effect.
Yes.
So is one way to put it in numbers. If I have 1 billion, I attract another 300 million. And how is the best way to attract more money to something? Is either fear sometimes works. Try to scare people that, that the sky is falling. Chicken Little type effect, or greed. We can appeal to greed, and we've got this great track record. We have, we've been around for. I just remember that line. I had Andrew speak that one time. We've been around for 100 years and only been bailed out by the government once. But that is something that you can use to attract people. And right now, what is happening? I see people, if you read, there was something I was reading earlier. It was saying, this stock and these stocks. I think these are companies that are going to do really, really well. They're talking about defense contractors, and defense contractors went up right away. when all of this stuff started to happen. It didn't take, a prognostication from some investment manager.
It's kind of like the space shuttle exploding. When a war starts, pretty quick, people figure out you're going to need more bullets and Band-Aids.
And exactly right. So I've been reading things on. There was one thing I read, and I wasn't going to go there right away, but I might as well. There was an article that is Iran on the brink of another revolution. And I thought this was interesting. It was talking about how, everywhere you look, you got another expert tell you it's not going to happen. Can't happen in Iran. Regime change is impossible. Never mind the mass protests of January. Regime has guns and they're willing to use them. And it was another article totally separate from that. It was just talking about how the leaders had a plan in place. And that plan was to attack their neighboring countries to create just turmoil. That's all they were trying to do, is create turmoil. And I thought, isn't that fact, navigating the fog of war?
Yeah.
And, you go, what do you do with that information? And a lot of people, what they'll do right off the bat is, when it comes to investing, if you have a philosophy of markets fail, in other words, I think markets are inefficient, that I think I can beat the market, I can maneuver, and I can do things to get higher returns, a la I'm using a slot machine with a handle. We use that example many times on this show.
Yeah.
Where you have a slot machine with a handle, and people prefer that over the one that has the buttons because they just feel like they've got more control when they're deciding when to bring that handle back. You pull it back toward you, but when you're going to push it back the other direction, you can control when those wheels stop spinning more. You feel like you can, and the reality is you are not in control.
No,
it is not.
And that's heavily regulated.
Yeah, exactly. You are not in control of that. But people feel like they're in control when they engage in, let me pull out of the market for a little while. Let me put more money in the market right now. Let me change my asset mix because I hear what's going on over in Iran. I hear that the Middle East is in turmoil. This could be a prolonged war. It could go on forever. And you go, the market's already responded based on what the general consensus of all informed investors was what was going to happen. And we don't really know if Monday morning or even Sunday or even later on today, you're going to have an announcement that something that really big happens. And then all of a sudden, all bets are off. And that's the way markets work. So they were talking about in this article, they says, this guy says, the vast majority of people are struggling. The political system is hated over there. He said the economic system isn't delivering. Salaries no longer meet the basic needs of life. There's an environmental crisis. They've drained the water table. Now they have an international crisis, to put it mildly. Every crisis you can think of, the Islamic Republic is facing. And this is people telling me, but it's strong and stable. Tongue in cheek. Well, it can't be that strong and stable because people are rebelling every few years. And on a scale the regime deems existential. And he says, there are people that they're regime supporters who he pegs as somewhere between 10 and 20% of the population are convinced they're going to defeat the U.S. in this war. They're not going to do it. He says they're just not going to do it. He says it's not going to happen. And he says, he stresses humility, which I think is really interesting that he puts that in this article. Stresses humility because that is that's an asset in short supply.
Yes.
When it comes down to people trying to predict what's going to happen. We don't know if the regime is going to fail. He said, but he doesn't buy the claim that the protest movement was crushed for good in January. And, the thing that he makes a point about here is, he's talking about, what is going to happen with this? Where is this going to lead? Our people are going to keep fighting. Right. Are they going to back down? You've gotten through 2 layers of leadership so far. How many layers are left? Right?
It's probably a few.
Yeah, there may be. And he says, you can't bet on anything. You cannot bet because all those things I listed right there, He said, here's the thing. The economic system isn't delivering. He said that a revolution, I can't find the line in the article, but I'll do it from memory. It was something to this extent. This is the line in that article that I thought was worth bringing up.
Mm-hmm.
He said, it seems like it's inevitable that it will go on forever until all of a sudden it becomes inevitable that it was going to be over quickly and things were going to change hands pretty quickly. That's the way revolutions work.
Yeah.
After something comes about and after something takes place, we go, oh, of course. And I liken it to tech stocks, right?
Yeah.
Of course, tech stocks were overvalued, Evan.
Right. Everyone could see the bubble coming.
Yeah.
Or bursting.
Yeah. There wasn't, you looked at all the big money managers in the late 90s, nobody was talking about that.
Yeah.
That it was a bubble. That talk about it being a bubble took place after that area came crumbling down.
Right.
And, I was talking to the guys this week, and we were talking about stocks and individual stocks. I recorded this little video, and we're playing around with putting together this video as opposed to, how we have the big educational thing that's about an hour and 15, hour and 20 minutes that we have on the website on the myths of investing. And how I'm breaking down the myths and just going, hey, this is all the stuff that you've been taught forever is how you invest.
Right.
Figure out which companies you ought to be investing in. Really study the company, study the balance sheet, study these companies, or better yet, find an investment manager that has done all of this work.
Right.
Try to move the money around. Look around at what's going on and kind of slide money into this area as things get a little bit uneasy. Slide it over here, sit on the sidelines for a little while, buy on the dips. Mm-hmm. Do that kind of thing. Do those types of things. That's really good advice, right? Yeah, this is all the stuff that we hear about, and it's tactical asset allocation, or you really need to look at the 1, 3, and 5 in the 10-year, preferably 10-year track record on a mutual fund manager. We've heard that forever,
right?
And yet it's bad, terrible advice. And what we do is we go through and break it down. Then we go, okay, no, that's not how stuff works. This is how stuff works. So I decided I was going to do this little short video, just kind of breaking down some of this stuff. And I'm walking through some things just off the top of my head, riffing. And one of the things that I decided to riff on is something I hadn't thought about in years. But there was a guy that did a presentation. He was the PowerPoint king before PowerPoint was cool.
Okay.
Wes Wellington.
Oh, yeah.
Yeah. So this guy was just brilliant, and he was just the king of the PowerPoint. And he would talk about all this academic stuff that we talk about, and he would have these great PowerPoint examples to back everything up. So he comes up and he says, when you're looking at a company, you're thinking about investing in a company. What do you think about? Oh, this company's great. I think that they're wonderful. The future's so bright. I'm wearing shades. I think everything's great. And he goes, RCA, future of the country, radio. And I brought that example up so many times in meetings this week that Scott in here, he's like, God, I'm going to go do some research on this. So he goes and pulls up RCA. And I said, it was the future. I mean, here we are on radio. And, radio is still going strong in America. Go figure. A company that was the pioneer should surely benefit, just as NVIDIA should surely benefit from AI, as somebody brought up this week. Yeah. So he looks it up and he goes, do you know how, and Scott says to me, you know how much RCA went down when it went, and this is in just before radio became really, really big. Just before it became really, really big, what that stock went down. Now, it went up in anticipation of radio being big, just like companies that are doing technology became big with AI. Take a stab at it, Evan. What do you think?
I'll go with 70%.
That would be a reasonable number. Would you believe it was 98%?
Wow.
Is that not unreal?
That's like that junk bond fund in the
it's even worse.
Plan or something. Yeah.
It's even worse. But that just floored me.
Wow.
And we got to talking about,
that's like GE.
Yeah.
Went from 60 to 6 or what, just
well,
90
GE wasn't quite that bad, but GE was pretty major. Yeah, for sure. It was like $53 a share down to $7 or something like that. But it was just one of those things that you don't see coming. because you think the future of this country is whatever this company is providing. Yeah. And what we do as investors is we think that we just got it going. We know what's going to happen, where things are going to go. And the investment community, investment advisors kind of get that in their head. And then after it happens, back to this article, after it happens, it seemed obvious that it was going to happen.
Yeah.
And I just thought that was so good. A revolution is only that it occurs is only obvious after it occurs.
Yes.
And you have so many voices out there saying that this is going to go on forever. It's going to be terrible. It's going to be, we're getting into a quagmire. Other countries are getting brought in. And that's the plan, is to cause chaos there. Oil prices are spiking right now. Look around at the gas pumps. Did you see that there was I sent Nick a chart earler. It was gas prices. And it was just showing this, gas prices, then like that, right. Straight up. Because he was talking about what he saw at the pump.
I paid $2.79 on the way over here at BJ's. That's like 70 cents higher than
was it? Okay, about 70 cents higher. Okay, all right. And it's going to be going on forever, and this is going to be inflationary. I'm hearing talk about this is going to be inflationary. I'm like, come on, guys, we're 8 days into something, and you're already making the comment that you know exactly where this is all leading, what's going to happen.
They can't. It's like waving red meat in front of a dog, right? They can't avoid making a prediction out of whatever's happening. They just can't stop themselves.
Oh, totally. Yeah, it is. It is hard. It is hard to just say, okay, I can't do this.
Hey, just a note to you podcast folks, we just came out with a retirement income guide, and I'm super excited about this. There are all kinds of myths about taking income in retirement. People worry about running out of money, and rightfully so, because a lot of these myths can actually cause that. Now, the myths that you typically hear about, number one, dividends, living off dividends in retirement. Real estate, life insurance as a retirement investment, and annuities and interest-bearing accounts and target date funds. There are all kinds of things out there. What I want to do is put something together that walks through why those things are problematic, number one. Number two, the other thing that I wanted to do is walk through the evidence-based research on taking income in retirement. And we got a ton of data going all the way back to 1900. What's the logic behind it? And it's intensely logical. So we put that together, and all you have to do to download that, making it super simple, just go to paulwinkler.com/relax, and you can actually get into that very easily right there. So I would urge you to do that. Check it out, because I think you're going to really like it. paulwinkler.com/relax.
So you asked me about war stuff.
I did.
What did you say? You said that there was more about that, and you had done some research, because
I have no social life, and so
good.
We're talking about, although we've been in this conflict now for 7 days, and I'll call it conflict. It's a war, whatever.
Yeah.
But I was looking at some of the history, some of it from workshops we've done in the past, and then I did just some current research this morning, and look at World War II, for example, and if you're listening to headlines, we lost between 35 million and 60 million people in World War II. That's worldwide, not just U.S.
35 to 65.
35 to 60 million people.
60 million. I
More
remember
than
51. Was it Korea that was 53 or something like that?
I'm talking about millions of
I'm just
people.
thinking, I know, I'm talking 50. That was 51.
50 to 53 was the Korean War.
Yes.
1950 to 53.
Yeah. But I'm thinking how many people we lost. I can't remember.
I may have that number in a second.
All right. Anyway, go ahead.
30 countries involved. Japanese economy devastated. 39 million deaths in Europe alone. And so you hear that and think, wow, that's really, the world is ending.
Oh, sure.
And yet, $100,000 that was invested at the start of World War II, which
37
we're calling 37.
Yeah.
Yes.
Okay.
By December of 1945, the S&P 500 had gone up 67%.
Okay, 67.
Through World War II, large value had gone up 140%.
140. Wow.
Microcap went up 284%.
Really? So
small
really
value
small
was up 241% during World War II.
241%.
Right.
Wow.
So, you talk about these predictions,
Yeah.
and I'll go through some of these other wars,
Sure.
but okay, I knew for certain the war is coming. So I'm going to go to cash.
Yes.
And then when the war is over, I'm going to invest.
Then I'll do it when everything looks okay.
And you
again.
missed
and the sky's clear.
241%
Yeah, for
of return.
sure.
Korean War, 1950 to 1953. More than 40 countries involved
Okay.
of all the troops sent to South
That
Korea.
many countries. Okay. All
About
right.
90% were from the U.S.
Uh-huh.
So from January 1948 to December 1953, S&P 500 was up 148%.
Wow.
Small value was up 100%. The only index that, the lowest performance was 81% up for microcap, but that's only over 7 years. So that's still
amazing.
like 10% a year.
Wow.
Vietnam War
Uh-huh.
went on, that's a long war. Oh, when are we going to get out? It's never going to end until it's ending. And we have helicopters, leaving the top
Right,
of the
sure.
embassy.
Sure.
From 1952, and that's kind of an early start, but that's where some of the hostilities were, but, long before we had gotten involved, to 75, S&P 500 was up 800%.
Oh, how interesting! Because I
From
like that you
52 to
chose
75.
I like that you chose 75 because you had in there, folks, a huge downturn.
Huge decline.
Downturn in 73 and 74.
Right.
So we're not cherry picking years there. You're talking about a period of time that after a huge decline, even with that decline, you still had that much.
Right.
Yeah.
And large value was up 1,900%.
1900
over that time. I mean, so Gulf War, it's the same story. And even if we look at Russia, Ukraine, if we look at more recent history, the official quote unquote start, let's say, of the Ukraine war is February 1st, 2022. And this is just through today because that conflict isn't ended.
Yeah.
But basically the Dow at the start of that war was 33,892.
Okay.
And yesterday it was 47,501.55. So that's still up about 30%, let's say, since 22.
Yeah.
And the Hamas war,
Without dividends.
yeah.
I mean, because when you're looking at a down number, you're
The
not
Hamas
dealing
war,
with that. Yeah.
same kind of story, 33,000 to 47,000, and that's in 3 years. And so this is nothing new, and the market can deal with that.
Right.
There's just been tons of interesting stories. Probably don't have time in this particular segment, but it's been a great example of how companies adjust in the face of war, and not just defense contractors, the people you would think, okay, the healthcare, maybe, just they will figure out a way to stay profitable and
Well, they
hedge
have
their
to.
bets.
That's the reason that they're there,
Right, yeah.
So if back in World War II, if we couldn't produce, cars,
Right,
we moved over to tanks and airplanes and those types of things. But the whole industry changed in general. And then people came together and they said, okay, we can't do this. We need to, they became rationing of different things to make sure that we had enough materials for the war. And everybody got together. And companies, of course, had to do something to keep going and producing new things. And it was interesting because Madison Avenue, after World War II,
right.
they had to figure out, oh my goodness, we're not producing this stuff anymore. That's when marketing really hit its heyday.
We have to sell toothpaste now.
Exactly. And the baby boomers, of
Right,
course,
right.
we got to sell diapers now, now later on. And little by little, as people got older, the products that they advertised and marketed changed, but companies continually produced things.
Yeah.
And you were talking about Ukraine and Russia. The whole talk about Russia and their involvement right now and giving intelligence to Iran, that has been a big news item.
And maybe munitions, I think.
You think munitions as well?
So.
Well, and on the other side, we're using drones that were tested by the Ukraine, right?
Yeah.
So. Yeah, it has been.
It's mutating technology. War is capitalism magnified, really.
I've been amazed just to see the technology that we have.
Yes. Well, and the Israelis, that some high energy weapon that's melting missiles coming in or something. That's pretty cool.
It is unfathomable. I mean, we talk about Space Force.
Uh-huh.
I'm just wondering what Space Force has that hasn't been unleashed because we don't want anybody to know it's there.
Right.
I mean, you just go, I don't know. Anyway,
Well,
but yeah, go before we break. Go ahead.
Actually, this was a personal note, just because we were talking about Space Force and all that. I've had numerous calls and questions in meetings this week of how the boys were doing. And because both of our sons are active duty.
Oh, yeah.
So a lot of clients had called, hey, is Jordan involved? Is Justin involved? And so they're safe. They're not currently participating in the sandbox or launching any rockets or anything like that. But thank you for your concern if you've
that is cool.
Been curious about that.
It's cool that your clients asked about that. Yeah, that's really cool.
Hey, this is Paul Winkler. Hope you enjoyed today's edition of the Investor Coaching Show. If you want to learn more about what we do, go to our website, paulwinkler.com. Until next time, I'm Paul Winkler, reminding you that I believe that more educated investors are more confident investors, and confident investors are more successful investors. Have a great one. Advisory services offered through Paul Winkler, Inc., an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and not intended to provide specific advice or recommendations for any individual. To determine what investments are appropriate for you, please consult with a financial advisor. Paul Winkler, Inc. does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.